After a difficult 2 years, inflation appears to be easing its grip on the US economy. The US inflation data was released yesterday and things are taking a turn for the good. The annual inflation rate slowed for the fifth month in a row, falling to 7.1% in November. This was below expectations of 7.3% and October inflation data of 7.7%. But this moderation and downside surprise was not just limited to the headline print. More promising of the data was also core CPI, which excludes volatile food and energy components. Core CPI rose 0.2% in November from a 0.3% reading in October, down significantly from 0.6% seen in September and August. Now, the Fed chair in a recent speech spoke about price trends for services, which does not include housing. Now, he believes it reflects inflationary pressures in the broader economy and are important when gauging inflation's future path. When we look at the Bloomberg calculations for this particular indicator, it rose just 0.1% last month after rising 0.4% in October and 0.8% in September. The November 2022 Consumer Price Index was cooler than expected, a sign inflation is moderating from its highest level that the US has seen in decades. But US inflation has remained historically high and above the Fed's target of 2%. However, the last couple of months' inflation data and the minor details of it does show signs of turning a corner for the good. The mutual fund industry made new records in 2021 with investor confidence returning to the industry after a tough pandemic year. But things are slightly moderating now. Let's discuss this. Until November of this year, the mutual fund industry added 5.8 million investors, down from 6.8 million investors added in the same period last year. Now, during the same period, the growth in assets under management increased by rupees 2.6 trillion, but declined a significant 63% from rupees 6.9 trillion addition seen in January to November 2021. So what explains this moderation? In 2021, the number of new mutual fund investors and asset under management increased substantially due to market opportunities and a general increase in savings due to a low interest rate regime, along with higher savings due to travel restrictions imposed during the pandemic. Now, just to get a clearer picture, look at this data. In November, the domestic mutual fund industry's asset under management topped rupees 40 trillion for the first time. Now, the industry just took 2 years to complete the journey from 30 trillion to 40 trillion. Now, previously, the 10 trillion mark took more than 3 years to achieve. Now, these figures were high and unsustainable. As a result, the moderation of new mutual fund investors and asset under management growth is in line with expectations. So what does these news mean for you? While the US inflation has remained above the Fed's target of 2% and the 3-year average of 2.1%, headline US inflation has fallen for the fifth month in a row, with core inflation also moderating. This will have an indirect neutral impact on you. Due to the exponential growth seen in 2021 on the back of a post-COVID-19 market rally and the rise of retail participation, number of new investors in mutual funds and the new asset under management in mutual funds is now moderating, which was on expected lines. This will have an indirect neutral impact on you. While I say this is me, Merlin Susanna, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.